how many of us lost money during the Luna crash? With a raise of hand, I can see Tom raising his hand there. Who else? Mimi lost. Saad, you lost money too? Because you said you just came into Web3.
I'm new to Web3 on a professional front, but I've been in the space personally for a while, so I know what the loss feels like.
I know, we all know. And how many of you all thought that it's a good idea to buy Luna at $10 or $9 or $8? I think now nobody wants to raise their hand. Because I'm sure we all felt it at some point of time that $8 or $9 is a good buy. But any which ways, let's talk about my favorite kind of crypto, right? Because, generally when we work with different projects, they want to pay us in their tokens. But for someone like me, I like stable coins because you do not know the future of the project or the volatility of the project. So I want to check with you, Saad, right? Because when it comes to stable coins versus CBDCs, what's your take on that? Like what do you think? Which way are we headed to that?
If you think about like the stable coins in general, right? Like the principle around stable coins where I see sort of maximum utility is actually for people who are sort of in the global south, right? Who are in jurisdictions or countries which are going through a hyperinflationary phase, right? And so if you can see countries such as Turkey, some countries in Latin America, some countries in Africa, which are sort of, where crypto adoption is really high, a lot of that crypto adoption actually comes from stablecoins. Because at the end of the day, the dollar at the end of the day has a 70-year history. Everyone knows the dollar. Wherever you go in the world, everyone knows what a dollar is, and it is accepted everywhere. And so the reality of the matter is that when we're trying to drive crypto adoption in general, ultimately stablecoins, everyone understands the concept, everyone knows what a dollar is, and that I think is for me such an important part of this whole conversation that we are about to have today. So for me, I think that's really sort of the founding piece, that ultimately the dollar, everyone knows it, everyone gets it. And whether you're somebody who's running a project, everyone needs the dollar. Everyone understands the utility of the dollar.
Since we are talking about dollar, I want to check anybody can answer this. That why don't we see other pegged currencies like British pounds or Singapore dollars, that is Tether. I think Manal wants to take that up. Go ahead.
Yeah, sure. I mean, it's not that we don't have any currencies backed by stable coins rather than the USD, but we can see a dominance within the US dollar for most of the stable coins. I think just for between the USD and euro, I guess we have 133 billion for the total market cap, while only 600 millions of that is backed by EU-based stable coins. So I guess especially for the euro, we are seeing a lot of initiatives starting from last year. We had the Société Générale in Switzerland and France who are starting issuing a stablecoin based by euro and Swiss franc, as well as Anchorage coin here in Singapore. They are just launching another stablecoin backed by EU and Swiss franc. So I guess the development that we are seeing now with the digital euro, even from the regulators, because again it's all about having regulators setting the framework, and I guess Mika is doing a great job by putting that framework for the digital euro as well as the stable coins in Europe. I guess things will change moving forward, and the US dominance, yes, is gonna be there. However, we would like to see more diversification within the region. For example, the Japanese yen, I know on macro perspective the Japanese yen not doing well, but again it's one of the major currencies around the world. So I guess that diversification, it's much needed in the industry in order to have diversity in the macroeconomic perspective, again, if the US as a company, as a country is having a lot of problems, we don't want to have that exposure of the monetary policy, for example, of the US. We want to have that diversification within the stablecoin ecosystem, and that's what we hope, to see moving forward.
Now, when I actually look at this, how many of us are in favor of gold-backed stablecoins? One there. On the panel? No one? Okay, no one is for the, okay. So when it comes to the stablecoins, I would love to know from Gabriel that in terms of the real use cases that you see as a Web3 startup sales lead for Google, how does Google and stablecoins kind of go hand in hand, or what's happening right now? Give us some juice from the world's biggest tech space.
So unfortunately, right, I'm just going to be sharing from my perspective. So I'm not going to be speaking on Google's perspective. But I thought an interesting thing to Saad's point, right? It's on the US dollar pegging for stablecoins, and he sees it in like hyperinflation economies. So I'll give you a personal experience, which I personally have actually seen. So over here in APAC, I think a lot of us, we're based in Singapore, based in Southeast Asia, we don't really see the presence of US dollar and its superiority in that sense. So I think over in the EMEA, and I was doing a trip with my wife late in 2022, we went to Turkey. So in Turkey, if they're using this currency called the lira. So if you look at the lira, if you Google it on your currency exchange rate, lira to USD or lira to SGD, you're going to see a whole slope like this. So when I was in Turkey, right, I was walking around the streets of Istanbul, Cappadocia, and all of that. And what really intrigued me, right, was that on these streets, you could actually see a lot of crypto exchange money changer. So this is something which you don't really see in Singapore on a day-to-day basis. You go to Hong Kong, you see one or two right now. They're currently sprouting out in 2023, 2024. But in Turkey, they're just about at every street corner. So I got curious, right? So I asked the guide who we were doing a tour trip with, I was like, hey, Mehmet, what's with all this, cryptocurrency exchange shop? Do you guys really go for it, or how does it work? And then that's where he told me, hey, Gabe, I don't know where you're from, right? But in our country, with the currency being devalued, the moment we receive our currency, we go stash it in the bank, it loses value straight away like this. The best way is actually to peg it to a USDC, a USDT. That allows the retention of value, and that's where the real world use case comes from. So every month when they receive their currency, you would see a whole long line of them queuing up to exchange their currency just so that they could safeguard their dollar value amount. And I think that's a very real world use case scenario, right? Something which we could apply in our daily life where maybe this part of the world we don't really see it, but elsewhere in the world where not everybody have the opportunity for a US dollar account, that comes really in handy. So after that, I was sold with the value of a stable coin, and I could see the merits of it being in this part of the world. Yeah.
I would love to know from Ida that you were talking about in-game tokenization a while ago. Am I correct?
No, but I'd like to actually bring to the crowd here and actually introduce that, because the topic is about the future of stablecoins. And over here, we're talking about stablecoins because of the volatility. That's why it's pegged to a US dollar, USDT, USDC, primarily because it is less volatile compared to the Turkish lira, and also in Southeast Asia, in the Malaysian ringgit is an example. But if you look at this from this point of view, these stable coins, they don't generate yield. That's what they do. They just basically provides the kind of stable, that's why it's called stable coin, all right? And it's being used to basically hedge your risk just in case your currency goes down, okay? But I'd like to bring over here is that how stable coins has moved, and it becomes a new form of stable coins, like Mountain, okay, is one example, and LST, another one. These stable coins that are coming up actually generate yield. They're yield-bearing stable coins that actually rewards you and basically makes money. So in other words, imagine your USDC will always remain one USDC. One USDC today is one USDC tomorrow, okay? But this stable coins, you are able to mint it, you're able to deposit it, You're able to actually incentivize from it, and then you get rewarded from it. Where does it get its pegging from? Real world asset tokenizations, okay? And on-chain staking, based on chain staking. And the reason because of this is that in the world of DeFi, in our world, there's this thing called on-chain speculation on the stable coins like USDC and USDT. This new class, the way it is structured, it decouples completely out from it. And this is what I'm very excited, because now stablecoins become sexy. It becomes new. And we are looking at it. I think Mountain has got about, if I'm not mistaken, it's about 16 billion in terms of volume. And it's coming out quite strong now. And that's what I want to actually share. And I like to basically throw it to the crowd, to the panel here, is that this form of new assets and stablecoins challenges the concept of stablecoins being used as payments, hedging volatility, and doing more than that. Raimo, what do you think?
I would love to know from the... Please go ahead.
Yeah, I see that very much. Stablecoins, interest-bearing, tokenized deposits, a lot of investment instruments, in my opinion, are coming up in that space. Where I'm coming from is RWA, trade finance. That's more the unsexy side of stablecoins. So what we need is a very sober, very stable, trustworthy medium of exchange. And for that, when we're consulting like the MAS and HKMA, we have all these discussions. So we're trying to separate that, because our goal is to onboard mainstream businesses, and also not so much at the moment private individuals, because we also see in developed countries the use case is very different. Pain points are very different from those in Turkey or lesser developed countries. So what we need is something to give that level of comfort to people, that $1 on the chain this year is also $1 on exactly $1 on the chain next year and 5 years down the line. And also $1 on the chain can be $1 on your balance sheet, one-to-one, dollar for $1, no matter what. And in that context, it is very, 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 very thrilling for me what the MAS is doing at the moment, because they want to get away from the USD dominance. And so far for me, US dollar dominance is primarily due to liquidity in the markets. That's always the predominance, New York City, Wall Street, and the US dollar is always that stable anchor. But there's also political will and interest to de-dollarize. In China, obviously, in BRICS countries and other parts of the world, and also back in Europe, of course, US dollar is not our base currency, so there's also some interest, more moderately packaged perhaps. And in that context, what the MAS has in the pipeline is regulating stablecoins, asset-backed stablecoins, more run like a money market fund, in the G10 currencies. So that's USD, Euro, Sterling, other major currencies. And that can be a game changer, because then we can play out in B2B the strength of the blockchain, Web3 technology, like real-time atomic settlements, like the immutable order trail on the chain. And then we can cover a lot of the trade streams around the world, like the container business, where major strategic trade routes come together here in Singapore, so the money flows will come together here.
Thank you. When it comes to stable coins, or rather, let's talk about dollars versus crypto. We all are, or rather we hear very often that the dollar is going to collapse, the dollar is going to collapse. I get very scared because I have a bit of USDT in my account, right? Because I like a bit of stability only there in my life. Otherwise, I like a bit of excitement. But when they talk about dollar collapsing versus this, I see an irony here. Saad, what do you think in terms of when we talk about, the dollar going to collapse versus, is there any other way to have our crypto in a more stable form?
So look, the reality is that, the reason for USDT or USDC, because ultimately it's used as collateral for trading, right? And so a lot of people actually come into the crypto space. I was talking about adoption in some of the global south. A lot of people come into the crypto space because if you go on the exchanges, most of the order books, right? Most of the trades are actually using USDT or USDC as collateral. So it's kind of like an entry point in a way for people to come into the crypto space and then discover other assets and then use that USDT, USDC as collateral. Now, the point you were making about whether the dollar is collapsing or not. Now, look, the reality is if you compare the dollar to other currencies, they seem to be sort of collapsing at a faster rate in many ways than the dollar, and which is why people find the dollar is like a safe haven asset, and that's kind of what we are seeing. If you look at the Bitcoin price in yen or so many other currencies, it's already past the all-time high, whereas it hasn't in the dollar. So I think part of it has to do with that. But I do feel that the stablecoin ecosystem actually serves as a great gateway for a lot of people to come into this space, and then they use their holdings in USDT or USDC or any other stablecoin as collateral, because most of the trading pairs that are available today for retail traders or even institutional traders are actually the stablecoins actually used as collateral. Yeah.
Thank you. Ida, since you spoke about a yield making stable coin, how do you envision the future evolution of the relationship between traditional finance, crypto, stable coins? Like, how do you see that? We already are seeing the ETF right now, which is driving the market up, which we are very happy about. But do you see anything else?
I think what we need to understand here is this. Okay, there are people who just buy and sell, trade crypto, okay? And for this group of people, stability is important. And that's why they look at USDC, USDT, okay? My world is in the traders. It's basically the people who speculate on the on-chain demand. My world is the people who knows how to take all these things and basically buy in the future and exercise it, so that, and therefore they build the margin on it. And how, from this, stablecoins fit into this, right? So I want to contextualize this first. In terms of the ones who just wants that kind of stability, the hedging and all those things, you will always look at a currency, a real world currency, okay? And how do you look at it? You will look at the stability of the government, the stability of, the historical facts, and basically common sense, and then you zero it and says it will be the US currency, or it will be a European currency, or it will be the Singapore currency, and then you find the digital crypto that is equivalent to it, okay? The future, I'm saying here, is the other side, which is basically the traders and the yield-generating assets. Basically now, you're making that stable coin, this class of stable coins, to work hard for you, not just as a stabilizing factor. You now can mint. You now can deposit. You can now, that stable coins now pay you back, okay, the interest out from it. Now that is trade, essentially. Now it makes, it's trade, okay, because it's revenue from it. And the one that gives it the stability, as we have seen, T-bills, all right, that's the use case, T-bills, the tokenized, that's the backing of it. And now it opens a new way of, a new form of basically distribution, capital raising, and at the same time, it yields for you. So this is where I find the future is going to really develop. But what we talk here about in terms of the inflation, the volatility, all those things, yes, it's true, because we're talking about the general people, and that's the stable coins you have. But in the trading side, this is what I think it's going to actually spearhead. Well, I'm looking at it very interesting, and I think in the next, especially this year, a lot of it is going to do. So for example, SDAI is one of them. They actually uses the DAI and invest in real world asset and then rewards back for that to people. This is absolutely mind-boggling, revolutionary, and it's new.
From RWA, let's move to Manal and talk about CDBCs, because I know that you also teach or rather are teaching the employees of Bank of Oman. What are they planning to do, or generally what do you see the bankers around the world are planning to do around the CBDCs?
Yeah, sure. Just before answering your question, I would like to, continue the conversation. And I might say, I'm sorry, but as much as I love to see a lot of innovation within the space, I must disagree with all the, the tentatives that we have seen within the space in order to have yield with those stable coins. In my humble opinion, I think what we are thriving, and again answering like the question or the topic of our discussion here, the crash of Terra Luna. Terra Luna has been like a fantastic innovation within the space until it is not, right? So for me, I see stable coins as a medium of exchange, and they have to be pegged by dollar. I don't think it's a medium to generate yield. We have a lot of innovation within the space, either in DeFi, real-world asset tokenization, or either, the tokenization of treasury bills. I think we have a lot of mediums to generate yields outside the stablecoin ecosystem. Right? So in order to bring that trust within the industry, we need more regulation. We need companies. I respect a lot the work of Circle, USDC, where we know that every USDC is pegged by real dollar, and it's very liquid. Unlike Tether, we can talk a lot about how Tether is not backed by very liquid assets, right? We have that chart that's circulating. Only 2% of USDT or Tether is actually backed by liquid currency. So I guess, bringing that amount of trust within the industry, thanks to the regulators, it's very important. The innovation on the other side, we have a lot of amazing projects, DeFi, real-world asset tokenization, where we can, generate that yield. And again, I would like to be not true. I would like to see more innovation. It's just within the stable coins. We want them to stick to be stable coins in order to build that trust within the industry. I would love to also hear my fellow panelists about what they think. Replying to your question, I had the opportunity to be one of the lecturers at the Central Bank of Oman. I'm based in Abu Dhabi, and the region in general is taking this revolution of digital asset very seriously. So for the Central Bank of Oman, it's a very small country, and the idea is to bring digital asset as one of the FDI mechanism where they can attract actually foreign direct investment to the country, and that's what we are trying to see by educating them, because for me, again, education, that's the base layer of any innovation. Again, I will open the floor to discuss about how stable a coin should be or how innovative a stable coin should be.
Yeah, thanks, Manal. Maybe I'll just chime in a little bit on my end. So I think as a group, or at least the panel, right, I think we can agree on a consensus that the future of stablecoin is bright and it's beautiful, right? But I think the thing which I always like to add on, right, is I agree strongly with Manal's view. From a stablecoin perspective, right, it is extremely, or you can think of it as a safe haven. And in that sense, that gives a lot of assurance and security to individuals who are looking to come into this industry or into the Web3 world, right? Think about it. Using fiat, you are not able to buy any coins on the exchange. Stablecoin essentially is your gateway to buying this, just like what Saad has mentioned earlier. So with that in place, I think we should always see stablecoin as something which offers a stability in that point of view. Obviously, going forward in the future, we might switch it up. There might be new incentives, new innovation in the product. But for now, I believe that until we regulate it further, this is a great framework. Because we saw what happened. The title of this slide is really apt, right? Terra Luna. So we saw what happened with that. I think more regulations, more framework, and structural frameworks has to be placed before we can discuss further on about how best to innovate stablecoin itself. Yeah, it's gonna be.
I do agree. So we need to find an entry point for mainstream businesses and private individuals to enter the space of Web3. And that has to give them a maximum level of comfort. And so for me, as long as they onboard onto the chain. I don't care if the first token is a CBDC or a regulated stablecoin, because the first one is always the most difficult one. So when you set up, open your first wallet as a business, you need to get straight on governance, on risk management, and so forth. So number one is the big effort. Number two, to 100 or 10,000, that's only marginal effort for them. And so once they have the first token on the wallet, and that can be CBDC from China, or it can be a token regulated by the MAS here, then you can tokenize pretty much everything in the RWA world around that, and also move into the more fancy stuff, like interest-bearing stable coins, like Bitcoin or other stuff.
Super. So is it like good to conclude that let stable coins be stable and provide us that safe haven, and let the other tokens do the volatility bit, because that is what we are expecting? Are we with that consensus?
I would agree, because the biggest worry for us is we are convincing people to onboard the world of Web3, which they understand little about, where they have a very, very low level of comfort about. And if they invest into a regulated stablecoin and it collapses, it'll destroy a lot of trust for the whole Web3 space, and would throw us back by years. And so I think this area should be ultra safe and sound.
Thank you so much. Our time's up. Ladies and gentlemen, please give it up for our panelists. Thank you so much.
Thank you very much, and I would like to invite our final panel discussion, blockchain on-chain driving enterprise growth through innovation. So let's welcome our moderator, Raion, on stage, and of course together with our panelists, Ling Wu, Du Wan Long, Michael Liu, Mackenzie Chng, and Eugene Kitkin on stage. Sorry we had to rush because we have a last minute. This a bit running out of time actually. We're actually running late. We have a 5 o'clock. We need to turn over this whole entire place for the cocktail.
Hello everyone, thank you once again for coming here. My name is Roy, I'll be your moderator for today. I'll let the fellow panelists introduce themselves one round before we start the official panel discussion.
Hello everyone, my name is Long from Vietnam Blockchain Corporation, founder and CEO. So we built the blockchain in Vietnam from last 8 years, the volunteer one. So now we, after 8 years, we build a lot of POC products based on the enterprises. And now we have some products that will earn money for around 3.5 million from last 3 years. That the digital traceability and support at the enterprise grow. So hopefully to have the speaking to all of my colleagues here and share the experience together. Thank you.
Thank you. My name is Ling Wu. I'm coming from California. So our company built a new form of visa. So the mobile payment users can go anywhere to scan any mobile QR code in different countries. And we use blockchain to do clearing and settlement without using cryptocurrencies. So you pay your home currencies, we do the foreign exchange for you, we guarantee the securities. That's what we are doing. Thank you.
Hello, hi everyone. My name is Michael Liu. Currently, I'm the chair of the Enterprise Blockchain Subcommittee for Blockchain Association of Singapore. Formerly, I was the chair for another subcommittee called the Cyber Risk Subcommittee for Singapore Fintech Association. So just a brief introduction of myself. I'm sort of a founder of startup. So I've done my first startup, which is an AI-driven legal tech startup, which was then sold to a law firm. So now I'm working on my second startup called Raion Labs, which is a blockchain intelligence startup. Because for the past 20 years, I've been working with the advisory firm, doing intelligence work, digital forensics, and also cybersecurity. So I feel that there's a need now, especially with the booming industry of blockchain and fintech, to have more sort of check and balance type of services. So that's where I come from. So we are in a more checker role rather than market maker to help to make the market even more robust. All right? Thank you.
All right. Good evening, everyone. Mackenzie here, investment manager of Aelf Ventures, and obviously good evening to panelists and Roy as well. So Aelf Ventures pretty much is a venture arm of Aelf. So Aelf is a layer one that's been around since 2017, 2018. I think that's the period when sort of blockchain crypto sort of took off and all that different stuff. So Aelf, a little bit more about Aelf Ventures. I think we predominantly invest into projects that would potentially build on the Aelf chain and obviously operating independently as a VC as well. So we've been around since I think last year. We launched an ecosystem fund of 50 million, and I think it's we do look a lot into Vietnam as well. I think there's a lot of gaming projects there, and we also recently, I think just last Friday, about a week ago, launched a incubator. This is actually called Vaibhavv Labs. So I think the main goal here, as tailored to the vision of Aelf as a whole, is to sort of be able to bridge Web 2 to Web 3. And we believe that via this incubation, we would be able to bring on a lot of new innovation ideas and all that different stuff. And I think as what Ling will mention, I think the blockchain technology, the capability of it, it's we all know it's slowly proving itself. And a brief background, I was an ex-founder as well in the ML ops space, raised pre-seed seed, and previously worked in 2 other funds that mainly focused in the US. Yep.
Hello everyone, my name is Eugene Kitkin and I lead the mining pool division at EMCD company. At mining, we are one of the world's biggest mining pool, and today we mine 3% of Bitcoin worldwide. We have 24,000 of Bitcoin miners in daily active users, and right now EMCD operate as a venture studio, and we also invest in and develop other financial products like peer-to-peer platform, like staking and deposit products and others. Super happy to be here. Thank you.
Thank you, my fellow panelists, for the introduction. So hi everyone, I'm Roy. I'm the CEO and co-founder for Emerge Group and DIFY. So for Emerge itself, we mainly do game publishing for most Web3 games. So we are the official game publishing partners for like Immutable, Tezos, and so forth. So yeah, let's jump right into the topic for discussion today. So first and foremost, the panel topic will be to drive enterprise growth through innovation. So I believe it's much more of the enterprise utilization of blockchain and the recent AI. But of course, with the interest of the event, we'll be discussing blockchain mostly. So our fellow panelists come from a diverse background, and I would like to actually understand that from, in Vietnam, they would discuss